The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 26th. How about that, folks? August 26th already. The marvelous Monday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to your potential, well, that's something we must master each and every day. So let's begin our day with some empowering beliefs. Let's start off with, folks, it's not what we get, but who we become, what we contribute, that really gives us the meaning in our life. Life is a gift, and it offers us the privilege, the opportunity, and the responsibility to give something back by simply becoming more. And those who have learned the power of sincere and selfless contribution, well, each of us experience life's deepest joy, real, true fulfillment. Personally, I discovered a long time ago that if I helped people get what they wanted, I would always get what I wanted, and I would never have to worry. Question: what contribution are you going to make to others in your life today? The question for each of us is not what we do, what would we do if we had the means or the time or the influence or even the educational advantages. The question is, what will we do with the things that we have? Why? You know why. Because you have an amazing power within yourself. Let's go check out the amazing power of the markets out here. Right now, the Dow is up 17 points, trading at 15,028. S&P is up 3, trading at 1666-ish. You've got the NASDAQ up 12 points, up 0.3%, up trading out at 3670. Russell up 1.5 at 1039. NASDAQ 100 up 0.4%, up by about $12 at 31.36. NYSE, New York Stock Exchange, relatively flat, only up $7 at the moment, but we do have 429 net advancing issues. Only needs 140 net advancing issues for the bulls to officially take back control of the market that, quite frankly, the bears have had control of for a period of, we'll go back and look, but it may be now almost a solid close to 30 days. It's either 3 to 4 weeks out there. We can go take a look at when that actually took place. So that's what we want to be watching on the NYSE. You got gold is flat out here, trading at $13.96. Silver, anything but flat. That's up 2%, trading at $24.20. Light sweet crude back off 46 cents. No big deal. Trading out at 105.96. Our calling number is 877-927-6648. Now, it is Marvelous Monday, and this is a even more marvelous Monday because just really a few minutes ago, TFNN kicked off the TFNN Virtual Trading Competition. Folks, this is a one-week program in which there's going to be $10,000 in cash awards, 70 total prizes. Look at that. I mean, those are great odds. Now, there's going to be 10 overall winners. There's going to be cash prizes up to $3,000. There's going to be 10 runner-ups who will receive an autographed copy of the best-selling book, The Art of Timing the Trade. There's going to be each day 5 randomly drawn winners. They'll receive $100 each. Doesn't matter whether they're in a winning or a losing trade, just simply for placing a trade out there. So that's $2,500 in total. Here are the particulars. You must sign up. I'm going to say you must sign up today. You've got to sign up by Thursday, September 5th, but don't. You're hearing me right now. You're near a terminal. Now is the time to sign up. Do not procrastinate on this one. Why? Because if you forget to sign up by September 5th, you're not going to be eligible for the competition. And you want to be eligible. You want to have some fun out there. The contest is going to begin on the following Monday. That's September 9th. The platform that we're going to be using here at TFNN in order to be able to monitor all this, it is the Nadex platform out there. So you want to sign up for that. As far as trading, it doesn't begin till the 9th. So what you want to do is actually sign up for the Nadex platform and get your other free account so that you can test drive that and start working with it. So you've got some time to understand how that works. You want to listen in from 1 to 2 every day to Daryl Martin's show because he can teach you the tricks of the trade out there. So it's a Nadex platform that we're going to be using. Everyone's going to start with the same $25,000 out there. do not procrastinate. Do it right this very second. 1 week long program with $10,000 being doled out by TFNN, by Tom O'Brien and the team out there. What a marvelous Monday. Doesn't get any better than that. So please, all the details on the homepage of TFNN.com. Let's go check out these markets here. Let's start out by taking a look here at the S&P, the cash index. Right now, just trading out at the 0.382 retracement. So we're taking a look at the cash S&P trading at 16, in essence 1667. You'll see, or 1666, I should say, at 1666 is the 0.382 retracement. What does that mean? That means we're taking a look at just simply the normal retracement level off of the high here, which is August the 5th. That's 1709.24. From that high down to the most recent low that was put in. That was done on August 21st out at 1639.43. It's possible that that is the first leg down of an A to B equals CD. Pretty decent leg. You're going from 1709 to 1639. What does that make it? That makes it about 60, 70 points out there. So now the question is, where is the C point of an A to B equals CD? And this is going to become kind of a tricky market here, because today, in order for the C point to push up into the area where I believe it's headed to, which may be nothing other than the 0.618 retracement, which is 1682 out there, then what we're going to see here is we're going to see a changeover. We're going to see where the bulls have actually taken control of the market. Why? Because you only need 140 net advancing issues on the NYSE in order for that to take place today. And so if the markets are going to push higher, that is something that is going to take place out there. What we also need to take a look at is this little channel/trend line. They're really about one and the same here as we take a look at coming off of the August 5th high. So you can go ahead and mark that. You can just simply use the top of the August 5th candle at 1709.24, and just use the top of the August 9th candle as well, 1699. That'll give you your trend line, your channel line, the whole kit and caboodle in this case. We'll see if that actually stops price. It will not surprise me to see price get up and actually close the gap. That's the gap that was left out here on August the 15th, the top of which, or I should say the bottom of which, really would be the high of the August 15th candle. That's 1679.61, and just slightly above that is the low of the August 14th candle, 1695. So our basic range, and it's a pretty decent range here, is probably the 1670 to 1695 level out there. As far as the A to B equals CD down, that could possibly be forming out here inside the S&P 500. If we go take a look at the SPYs and go see what that is out here inside the SPY right now, that is trading out at 167.02. We'll go ahead and blow this up on the screen. If we take a look at the SPYs, you can see the 0.382 retracement was 166.78. That was the high that was achieved on Friday. Closed back below it. Volume on Friday, 90 million shares, going into a downdraft of 152 million shares. So that sets up the more likelihood of us forming the C point of an A to B equals CD down. The C point very likely going to come in around the 168.37 to the low of August 14th's candle, which is 168.70. So I would say that is likely the range out there, and that'll set up a nice A to B equals CD. If you want to see what that would look like out here, we can go ahead and draw that in advance. So if we go from our A point to our B point, the B point being the August 21st swing point low, that's at 164.19. And if all that we make is that 0.618 retracement, I'm going to say we're going to make it all the way up and test the low of August 26th. Your 1-to-1 would take you into about 161.90. That would be the equivalent of 1620. Now, in speaking with David White, it looks like options expiration, that the Bulls and Bears, that looks like 1620 is the number. Maybe it's a bit lower than that, but it looks like about 1620 is the area. So you've got now an A to B equals CD that could be forming out here that would also take us right down there. But as I say, it's going to be a little bit of a tricky market, because as the market pushes up today, the bulls are actually going to go ahead and take control just simply from using the oscillator as one of the indicators, as the indicator to understand who's got control of the market. If we go back over, take a look at the New York Stock Exchange, I can do that here momentarily. We'll take a look at that. Give me a moment to go ahead and pull this up here. So the oscillator here is up towards the zero level. Now, inside the NYSE, if we take a look at, and it's up just slightly this morning. It's trading out at 94.86. If we take a look at it, it's above the .382 retracement, though. So that says, okay, sweet 618 is on the way, 95.49. The question is, will the NYSE only get inside the gap, or will it go ahead and close the gap? The closing of the gap would be at 95.89.79. That is the August 14th candle session. So we'll just have to watch and pay attention to that. If we take a look at the other indices out here, let's go take a look at the Dow. Let's go see what the real dog inside the market is doing out here. See if we can get any kind of leadership out of the Dow. I was going to call it the dog, but out of the Dow. We'll go take a look at IBM and see what it is doing here momentarily, because that is the number one weighting inside the Dow. Now what we can see is, take a look at how weak the Dow is, folks. Coming off of the swing point high, that is out here on August the 5th, out at 15,655, down to the low, put in on August 21st. Hasn't even come close to the .382 retracement. And that's a level of 15,176. So what we don't want to watch for is the Dow only making a .382 retracement while the S&P is making a .618 retracement, as the NDX and the Russell 2000 go back and test their swing point high. So it's going to be the Dow that still right now, it still is the laggard out here. And you can see it has not even come close to making that .382. That's another 140 points up before it only gets to the dead cat bounce, before it only gets to the .382 retracement. It is probably this index alone where we may get that signal from. Why do I say that? It's an excellent question, and thank you for asking. Well, what the Dow has done here is the Dow finally broke that trend line coming off of the June 24th, off of the November 16th low out here. It touched the November 16th low, it touched the December 31st low, it touched the June 24th low out here, and that trend was broken. When you break a trend, what price likes to do, it likes to go and confirm that it doesn't want to be inside that uptrend. So what would likely occur here is if we take a look at the actual Dow, you can use the touch point that shows you the channel lines, and really the channel and the trend here are very similar to each other. What you can use is the top of August 5th, the high there at 15,655. Your next touch point, just in order to get the channel line, use the open of August 14th, the high of August 14th, 15,453.08. That'll give you your channel line. And you'll see that as price tries to make its way back to that dead cat bounce, which I suspect it wants to do, that's in the 15,176 area, it's also going to try to spike and get inside that trend line. And if it fails to get inside the trend line, that is likely the area where we will see some synergy in the markets with the retracements. And then if volume is all light on that move up, and maybe a couple other things that you'd want to take a look at, that is what would likely be setting up the B to the C of the A to B equals CD down. Now, in the other indexes, meaning inside the composite, inside the NDX 100, inside the Russell, all that it's really setting up is a consolidation range at the moment, unlike the A to B equals CD down that the Dow, in fact, may be setting up. Now, let's go, we'll take a look at the other indexes when we come back from this break, but in the meantime, I've got about 20 seconds or so, let's go take a look at the Dow out here. This is the weekly chart. Now, what the Dow has done on the weekly chart, it has actually tested the swing point from January 13, 2012. That, folks, that high was 183.72. The low so far that we saw last week was 183.17 and a close of 185.42. We may have seen on a weekly chart the actual consolidation low that has been hit. Maybe the Dow is going to do more than what I just said it would. It's going to need IBM to actually dance along out here. But IBM on the weekly chart has tested the consolidation zone. 877-927-6648. During this break, go sign up for the $10,000 TFNN virtual trading contest. Be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Don't forget, right now, if you didn't do it during the break, do it right now. We've got the TFNN Virtual Trading Competition, $10,000 in cash awards. $10,000 in cash awards, 70 total prizes and all. All the details on the homepage of TFNN.com. As we come back to the markets here right now, we've got the Dow is up 23, S&P is up about 4 points, Composite up 15, Russell 2000 up 2. We were taking a look at the IBM chart here on the weekly basis before we went to a break. So let's finish that off. One of my favorite patterns, because you don't need to have any kind of real technical analysis tools, is being able to identify consolidation patterns. These are great trading ranges, and as we take a look at IBM, what we can see here is going back to the time frame of January of 2012. Now, so we've got basically a 20-month consolidation pattern, and the top of that, or the bottom of the consolidation on the weekly chart, would be right around the 183.72 range. We saw price move down into that level last week. Now, today here, Now, the first no bullish candle. All you saw was a little bit of a doji candle last week, which to me just means that, and it really should mean to you as well, that the market is getting tired. So on a weekly basis here, as IBM was pushing down, the purpose of that signal here was to tell you that that IBM on a weekly chart was just simply getting tired on that push down. Now, if I switch over to the daily, we go back and forth between the daily and the weekly. We take a look at volume on the push down here after it really broke down on August the 15th as it moved below the swing point. That had a high volume swing point on April the 22nd, had 9.8 million shares. As it moved below that, well, was it getting tired? On August 15th, 3.6 million shares, 3.4 on the 16th. 3.2 on the 19th. When it made that, in essence, the low out there on August 20th, 3.1 million shares. 3.5 on the 21st, 2.3 on the 22nd. 2.2 on August the 23rd out here. Today, so far, it's on 525,000 shares. Now, on the daily chart, if you come back and you take a look at it, you had a nice breakout. It had a very nice breakout coming back to January the 20th. The volume there was 13 million shares. Now, it's a 30-point consolidation range. And I've been waiting patiently. I mean patiently for IBM to actually pull back into this area. Why? Doesn't mean that the trade is going to work out, but it's an area where your back is up against the wall. And I'm happy to take a risk, knowing that there is a 30-point reward inside of IBM. In fact, what I would do is if, in fact, we were to see a close below this consolidation level, I would go ahead and close out my trade. If it hadn't already closed out, I'd flip to the other side of the trade out there, because this consolidation pattern is either going to continue in the consolidation, which would be a 30-point move, which would be a move back up into the $211 area eventually, or it's going to go ahead and it's going to move down into the $150 area and pull all the way back down into the August 19th of 2011 lows out there. That low is 157. That's your next real serious swing point out here. So IBM is either going to go ahead and hold the consolidation area, or it's going to go ahead and crack it. Now, what I was noticing over the weekend, which is why I had the weekly chart up on my screen, I was kind of like, what to do now, because it hadn't achieved the low that I was looking for inside of that chart, that breakout area that we were looking at back in January. So what I'm going to do is just wait for a signal. Weekly chart is not over. This is only today. And knowing that on the weekly charts out here, inside the composite, inside the NDX, inside the Russell 2000, inside the S&P 500, the weekly charts, how about just the monthly charts? They are far from showing any kind of bearish reversal patterns at the moment, that this is going to be a big week. This is going to be a big week. We'll see what if it does provide us with any indication as to whether or not the market wants to have any serious pullback, or whether it's ready to continue its move higher out there. With IBM being down at these lows, at this consolidation level, with it being the number one weighting structure inside of the Dow, it's something that we need to monitor. We want to be able to monitor. What's number two inside the Dow? I think somebody asked that question. I believe that the number two holding inside of the Dow is Chevron. So let's go take a look at Chevron. It should be Chevron or 3M. So it's one of the two. I think it is Chevron, CVX. So let's go see what Chevron is doing, just to get an idea, because the Dow is certainly weak links out, or is a weak link. So we need to go see what's going on inside that weak link. So let's take a look at Chevron. CVX, by the way, is the ticker symbol. And in the case of CVX, it has come back and it has tested the June 24th area. So let's get rid of a couple things. Let's get rid of the retracement level on the chart here. So in the case of Chevron, on June 24th, it came back and it tested the 200-period exponential moving average. That was a low back then of 116.02. 116.01 was the actual 200-day exponential moving average. Came back and that held. That was a beauty. Had volume of 6.7 million shares. The latest test down here, which happened on August 21st, was on lighter volume, 5.6 million shares. So not enough to bust through it. Not enough at all. And in fact, what held it seems to be that 200-day exponential moving average. 877-927-6648. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 15, S&P up 3. So quiet Monday, except for here at TFNN. We've got our TFNN virtual trading competition. It's going to be kicking off on September 9th. You must be signed up by September 5th out there. $10,000 in cash awards. $500 each day going to be just simply handed out to folks. 5 5 individuals receive $100 a day just simply for placing a trade. Again, we're using the Nadex platform in order to be able to manage this. Go over to the homepage at TFNN.com, do 2 things. Sign up for the contest, and as well, sign up for the Nadex platform so that you can start test driving it. You can start trading with it out there. Listen in each day to Daryl Martin show from 1 to 2. He's the Nadex expert out there. He will teach you the power behind that platform. Let's go take a look at the rest of the ETF structures out here for everyone. Let's take a look at the Qs. Let's go see what the Qs are doing. The Qs here gapping up on Friday with light volume, 20 million shares coming into the swing point from August 13 with 23 million shares, 77.27. That's an area we need to watch. So far, volume here in the first hour of trading, not too shabby, 4 million shares. If we were to straight line, it would be 24 million shares, but that's not the way that is going to work out there. So expect a little bit lighter volume as the price moves back into the top of that swing point from August the 13th out here. But that's still, no matter what, volume or not, that's what we want to be paying attention to, the 77.27 level. That is on the Qs out here. Maybe we get some type of signal there. Let's take a look at the IWM. Also, the index that is showing some strength out here. That is going to go ahead and try to close this gap right now. That's trading out at 103.41. Intra-session high, 103.49. The bottom of the gap from August the 14th is 104.01. 23 million shares. On the actual gap down day was 50 million shares. So we're up above that level on lighter volume. 24 million shares, 2 trading sessions ago on Thursday. On Friday, only 20 million shares. So far today, volume is pretty good, 5 million shares out there. We've got Victor on the line out here, Victor from Paramus, New Jersey. Victor, you wanted to take a look at Marvell, I believe?
Yeah, Marvell. Then I want you to look at POM, that goes ex-dividend next week. That's utility stock, and then Intel.
Yeah, let's try here one thing at a time here. Let's go over. Let's take a look at Marvell, MRVL. Now, are you in this trade? Or tell me what you're doing here?
I'm looking. They seem like they have a good product. They're getting beat up. The high volume on Friday, their earnings came out. They said they beat their earnings too.
Yeah, the market, whatever whatever they said they were doing, the market didn't like it. Traded down with a big volume. 21 million shares. You could really classify that as volume off of the top out here. Made a high about a week and a half prior with 7.5 million shares on August the 14th, and then really moved sideways. And then, as you said on Friday, 21 million shares to the downside. So it looks like Marvell will come down and at least test the 200-period exponential moving average, maybe even further than that, Victor. The 200 period is $11.15. So I would not step in front of this freight train here, not until you see some kind of sign of strength or a real test of support that the sellers are gone. And even today's trading here, it's already done 5 million shares in the first hour of trading out there. So I don't recommend Marvell. What was the other one you wanted to look at? Oh, we must have lost Victor, and I do not recall what else you wanted to look at. So on Marvell, I would be very, very careful out here on this equity. This thing could run all the way back down to its lows at 698 out there. That was on Marvell. Let's go back and take a look at the ETFs. We did the Qs, we did the SPYs. Let's go do the diamonds. I don't think we took a look at the diamonds on the ETF structure out here. So let's go finish that up. Or if we did, we'll do it one more time. No, I don't think we looked at the diamonds. We looked at the actual Dow itself. So on the diamonds here, what we should be looking for is at least the dead cat bounce, 151.46. That'd be your .382 level. But more likely, probably coming in to try to test the trend line that it too broke here. Broke that on August the 15th. Did it with 10 million shares, so it had good volume as it accelerated through that trend line. That's a trend line coming off the lows from November 16th, 2012 out there. So expect that the diamonds want to get back and try to test that area, then try to get back inside the trend. If they fail to do that, that may be where everything lines up and gives us our next sell signal in the marketplace. Let's go check out some of the other things that are moving out here. Let's take a look at the commodities, and we'll take a look at the currencies. So commodity-wise, let's take a look at Goldilocks. Not doing a lot here this morning, but again, if you were listening in on Friday's show, we just happened to really timed that one right, because when I was taking a look at these small-bodied candles, now these small-bodied candles that took place after that nice little upthrust on August the 15th, they indicated a market that was getting tired out here. But it was also really working off the potential of an overbought condition, and it was really right at about Friday at around 9:50 or so in the morning, where I said, what this now looks like to me is that the gold is getting ready to take off, and most certainly it did. It went from a low of 1367 up to 1396. Not a real takeoff, but again, some additional strength inside the gold marketplace. 1441 into the 1460 level is where, and the 1480, somewhere in that range is where gold would like to move to. It's silver that is really had the energy on the daily basis. If we take a look at the daily charts out here, it's now over the 1 to 2 A to B equals CD, but it has enough strength to run up to the $25 area. It's trading right now at 24.21 out here. Don't be playing silver to the short side. You know, for those of you that might be doing that, instead, just be patient and wait for silver to finish this run, and then look at buying the next pullback. But my recommendation would be not to be shorting silver or gold, any of the metals out here. What you want to be looking for is you want to change the thinking to places where you should get in and buy. If we take a look at light sweet crude, that thing has just simply been consolidating ever since the early part of July 5th, July 8th. So we are now into almost our second month, so seventh week here of a sideways move, a 7-point sideways move. It wants to break through that area in order to get up to 114 to the 116 level. That's assuming that it goes ahead and breaks topside. We're looking at two consolidation patterns. One is a 14-point move. That was one that went on from the July 2012 time frame. We saw a breakout of that area back in July of 2013, and that set up the move to 114. Now we're seeing another sideways consolidation, just trying to coil up. And all that it's really done, it's worked off the bought condition out there. So at some point in time, we ought to see 1 to 14, unfortunately, inside of light sweet crude. If we go take a look at bonds here look like they are now poised to really bounce. We got I saw a signal on this. Actually, the first signal came in, not one that I'm trading, but that first signal came in on August 20th when it closed at 131, 110. You know, where's that bounce going to likely take us to? Probably about 135.06. Probably back down to the bottom of this long-term consolidation range. That long-term consolidation range going back to August of 2011. So it'll try to get back inside there. I suspect that's where bonds run into some real resistance right around the 135 level. That's probably where it is you want to start taking a look at a short. And on the other, because your back is up against the wall. On the other hand, if it gets inside 135, maybe it gets inside the 130, up to about 136, then maybe the move higher in bonds would be real out there. But instead of trying to go long bonds, I'd say just be patient and look for places to go short bonds. If we take a look at natural gas pulled back a little bit on Friday, just having and you got to expect that. Why would I say that? Well, if you take a look at the retracement that it did off of the swing point from July 18th, $3.83 down to the low, that key reversal bullish engulfing session on August the 8th, it made the 0.618 retracement. When you make a 0.618 retracement, those folks that took the long position, that's the first place to start taking your profits off of the table. In this case here, really price still traveling with inside that bar that it made on August 22nd. Looks to me like the bottom is in on natural gas. What we'll see here is a move up to 368 and then a 100% move into that 383 level. Right now, today, just an inside day, so no real additional information there. If we take a look at some of the spiders, let's go see what's going on inside the ETF structure out here. Let's start off with the number one weighting inside that. That would be the XLK. Let's go see what the XLK is doing. The XLK not really giving it up during this little down move that we have had in the market. The XLK is trading inside the gap that was created on August the 15th. If it's inside the gap, what does that set up? It sets up a move to the top of the gap, or at least the bottom of the session, which would be the August 14th area at 32.26. 5.2 million shares up there. So long as it, let's see, it was on Friday it was 5 million shares, so not too shabby as it moved into the gap out there. It looks like it actually it did close inside there. Today's volume, 1 million shares in an hour and 15 minutes of trading. Not overly enthusiastic volume, but it should go test that swing point from August the 14th. That's on the XLK. That is on your number one weighting inside the S&P 500, so it has not given it up. Let's take a look here at the XLF, the second weighting structure inside the S&P 500. The XLF formed that nice 1.272 butterfly pattern. The normal move would be back to the 1948 level. It may make its way down there, but not until it also tries to move higher and probably test its gap from August 14th. That'll be somewhere either in the 2035 range, or which would also be a test of that May 22nd. Now, in the case of the XLF, it's weaker, way weaker than the technology sector. It's below the May 22nd swing point. So the likely logical test for the financials before they provide us with any other real bullish information will be, can it clear the May 22nd high, $20.35. That's where we'll also run into some resistance of the gap down that took place between August 14th and the 15th out there. Again, the low on the 14th, $20.35, matching the high of May 22nd. So that looks like that's where the financial sector wants to head to. The energy sector here getting some energy today, trading out at 82.30. Now, the energy sector is, I believe, maybe the fourth or fifth. I think it's the fifth weighting structure inside of the S&P 500. Where is this headed to? Let's just take a look at the retracement that it's done off of the August 1st low. It's hitting the 0.618 level today. That is at $82.32. I suspect that this will make it all the way back up to test that swing point high. Well, test the swing point from August 1st. I'll call it a swing point high, but it'll probably test the low before it provides us with any information. That's at 83.06. That's got 10.6 million shares out there. So it's got room to run to the upside. The healthcare sector, that is the XLV. That is the number 3 weighting structure inside the S&P 500. This gap down on the 15th with 6.4 million shares. On Friday, moved up with 2 million shares. Right now, it's going to tackle the top of the gap. That means the high of the bar from August 15th, $50.18. Again, that had 6.4 million shares so far in today's trading. 758,000 shares. So math-wise, and if I give it the benefit of the doubt, it's going to be way light coming into that gap down area. Nonetheless, this probably will go ahead and close the gap, get up to the August 14th low at about $50.46 out there. Let's go see one. Let's take another. Let's take the utilities sector. I believe Victor had called about a utility stock out here. So let's just look at the utilities sector out here. That line is an old line out there. Let's trade out at 37.57. Let's take a look at the retracement that it did from the June 20. This made a low on June 21st, not the 24th, to a swing point high that was put in on July 30th. And that made the 0.618 retracement. Not a lot that we're seeing here. As far as where this could travel to, the utility sector, I would have to say the 38.06 level would be the likely. That's a dead cat bounce. Maybe it can make it up to 38.73. Not a lot of energy inside this at all. 1.8 million shares today. This is after coming down on August 16th with about 17 million shares. So really nothing inside the utility sector, at least the ETF. Victor, if you're still listening in, that is suggesting taking any long positions, perhaps maybe you're taking like one of the stronger utilities inside there, but I'm not seeing it inside the overall ETF structures. Speaking of overall ETF structures, everybody likes to take a look at the GDX, so let's go do that. I think I've got that inside the gold tab on my system, so let's go take a look at the GDX. It should be somewhere around here. There we go. Here we take a look at the GDX. This thing here wants to make a run 31.73, maybe even 33.87 out here. It's got a confirmed A to B equals CD up. The B point was formed on July 23rd. Had volume of 39 million shares. Passed through with 67 million shares on August the 15th. That sets up a move. It's already above the 1-to-1, but it clearly was going to do more than the 1-to-1 because that's the B point that formed out there with the volume. Nice wide-ranging bar. Markets do not end on that. You can see here that has just been consolidating sideways here, just coiling up. So 31.73, 33.87 is likely in the cards for the GDX out there. So if you're in this trade, just simply adjust your stops. Let the market go ahead and take you out of the trade out there. What else? Let's currencies. We haven't looked at any currency pairs, so we ought to do that. Let's go see what the Queen is doing. The queen being the euro-U.S. dollar currency pair. The queen here not giving up on its efforts to try to bust out to the upside. And busting out to the upside would be a close above June 19th candle, 1.34156. All we have seen here for the past 4 trading sessions is trading with inside that bar that first tried to break it out on August 20th. Failed, but we haven't seen a breakdown of that bar here yet. So we should see another run, and that would get the euro up to at least the top of August 20th candle, 134.50. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 23, S&P up 4, Composite up 17, Russell up 4, and don't forget today's the inaugural kickoff of our TFNN virtual trading competition. $10,000 in cash awards, 70 total prizes being given away during the week-long competition. What you want to do, folks, is go over to the homepage at TFNN.com. You must sign up by September 5th. The competition will kick off on September the 9th. There's going to be 5 winners each day going to receive $100. Just simply for placing a trade. We're using the Nadex platform in order to manage this whole thing, so you can certainly test drive the Nadex platform between now and then to get comfortable with it, get used to it. 10 overall winners, they'll receive up to $3,000 in a cash award. It's a great program out there, so please do it now. Go sign up for the $10,000 TFNN virtual trading competition program. We come back here and we're going to take a look at the NDX 100, take a look at the monthly chart. If you're watching us on Tiger TV, thanks so much for doing that. If you are listening on the radio or your mobile device at TFNN.mobi, remember, you can always catch the archive of this show on Channel 10 as well as the live stream by going to the homepage of TFNN.com. Over on the right-hand side, you'll see that button that has got 3 little, smartphones or pads on there. Click on that. This show will stream live to you. Now, we're taking a look at the monthly chart. Now, month doesn't end here till the end of this week. And let's see, today is what, the 20, what did I say? Today is the 26th. So when does the actual month end here? Is it Friday? I guess I've got to pull open the calendar to see. Yeah, it is going to be Friday is the end of the month. If the month were to end right now, folks, it is not a bearish monthly chart at all. In fact, what you can see here is that the NDX is actually up over a resistance area. That resistance area set up here by this candle. This is a dark cloud cover. It is a reversal candle that came in here in June. Of course, that reversal candle was immediately taken out the following month here in July with a little bull sash candle. Now, how was it taken out? It was taken out because on that dark cloud cover, you would use as resistance the candle that it covered or had that little dark cloud. And dark cloud just simply means that the close was more than 50% into the body, unlike a bearish engulfing, which would enclose the entire body of that session. Well, the top of this candle was the high was 30.53.51. We had a close above that in the month of July out here. You can see it's just simply traveling higher right now, traveling out at 31.39. So the NDX, this market is not going to go south without the NDX 100, and it is up over a resistance level. What it would need to do is get back below the high of that session from May, the top of which is 30.53.51. We'll see how the rest of this week trades or closes out here. Likewise, inside the composite, you're going to see really the same thing on a monthly chart. That too is not a bearish looking chart at all. In fact, the resistance area or support area now ends up being the only bearish candle that we've seen here. Takes us all the way back into the October time frame of last year out there. So there is no bearish looking signal here on the monthly chart for the composite. We take a look at the S&P 500 right now. S&P 500 also just really providing us with a little bit of a pause button in the candle that has formed so far for the month. However, the S&P is not up over the old resistance level, which would then become support, and that is going to be the high of 1687.18, and that is the June high. So you're at 1676.97. So that is still trading underneath a resistance level. That's on the S&P 500 on the monthly chart. If we take a look at the Russell 2000 out here, the Russell 2000, not a bearish candle at all. In fact, they haven't really seen any bearish candles to speak of on a monthly chart inside the Russell 2000. So it is trading up towards its highs out there. How about that? Time flies. Folks, stay tuned. Basil Chapman, he's up next. I'm sure well-rested from a well-deserved vacation. Don't forget, folks, go over to the homepage at TFNN.com. Sign up for our TFNN virtual trading competition. Have a great Monday. I look forward to seeing you tomorrow morning. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.